The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. What an interesting session today. We're kind of waiting, a little bit of a rally, a little bit of a slide, a little bit of a rally. Whoops, suddenly, in the last 3 minutes, we're up 64 points in the Dow. We're up 12 points in the S&P. This is interesting. Let me explain what I'm looking at. The E-mini is up 14.75. There's a peak C in the Chapman wave methodology. Remember, we're always looking for that fourth leg higher, the D, and that should occur if the E-mini goes above 2741.75. That was peak C 3 days ago. The MACD, I said to subscribers, I like this. We're staying in all our long positions. We have no short positions. Well, I must say that we should have stayed with that Pulte Holmes short that we had at 33.5. We took real nice profits, but it's still only at 29. I mean, it's really poor. Anyway, here we go. The E-mini stochastic is at 90% in the daily. 120-minute chart has just started leg C. Real nice turnaround from the low of 2,700 yesterday. Peak A, peak B. Now we're in leg C. There's a cup formation forming. I'm not going to have time to draw it in right now. I can, for those of you doing intraday trading, say that the 2-minute is in leg C. The 5-minute is in leg D, and the 10-minute E-mini is in leg C. So still very positive. Should be higher highs to come today. All right, let's get to the nitty-gritties. The Dow, INDU. The Dow up 60 at 24,766, made a high of 24,868 just 3 days ago. Pulled back. We've been long. We've actually been long for since the low that was made back on the, was that May the 4th? May the 3rd. And we got stopped out. We kept going back in. We're taking profits. We're still holding longs. I like this. I like this because the Dow diamonds suggest to me that there is a move in the weekly chart of that lowercase h that goes to an M. There's the template I drew in a long time ago. And that tells me that there's a little more upside to go. Let me just get rid of this for now. 120-minute chart we don't need there. We needed it for the E-mini. Oh, I didn't tell you, just I like to complete that thought there. So the E-mini has 27, it's at 27.22 right now. It has 27.19 as pretty important short-term. This is near-term. I'm talking about the 2-minute chart support. And if we can get to 27.26, what it does is it makes us leg C, no, leg D in the 5-minute chart. It actually makes it a very viable buy mode because it's at 85%, and the stochastic is really important here if it's holding above 82%, I'd say. And at this point, the MACD is cross positive, and it's helping the 10-minute chart, which was technically it pulled back a little sharp, but then it regained its upside momentum. So at 27.26 anytime today, that's going to force buyers into that's going to be the issue. Does it hold there or does it get repelled? My thinking here is that there are so many people that got quite bearish that we should go higher. All right. The Dow at this particular point has 24,623, 24,623 as the 9-period moving average. And I suspect that it's really 24,740s. That is the very near-term support that we're looking at. Weekly chart, as I said, has a little bit more to go before I start to see strong resistance in this H that goes to an M pattern, maintaining a sideways trading band, and that's going to be very important. Let's go to the S&P. S&P up a little more than the Dow. Dow's up 0.23%, S&P's up 0.47. QQQs, you'll see, is up 0.71. Very nice. So S&P needs to get above 27, I think that's 2742.10 to start leg D. It's made one arch formation, held very nicely in the 200-period moving average. MACD is good. Stochastics at 90%. I like what I see. Here again, I think a little more to the upside, and then we're going to have to see whether or not we're making an H to an M pattern. That'll be a failure pattern. Our monthly chart and both are down. The S&P are still good. QQQ, let's get to that. The Q's right now, 169.09, up $1.22, up 0.73%. It's gone to a peak E. Now, I'm not sure if this is going to turn out to be an instant restart. That would imply that we need to rally all the way to Tuesday, Wednesday of next week. I'm not sure about that. Meantime, MACD and Stochastic are very good. 169.11 right now, up 123. 167.58 is the 9-period exponential moving average support in the daily. The weekly chart has made a real nice cup formation, and my contention is that we cannot dismiss the minus, I think it was minus 12. Yeah, minus 12.7 and the minus 12.1% declines that we've had from the 26th of January high down to the February 9th low, and then screaming back up to 175.21. The week of the 17th of March down to 153.88. Now back at 169. This is chop, chop, chop with higher highs and higher lows, and that's the way it helps the monthly chart. A close in May below 165 would say the Qs are going to continue the whole digestive formation, but at this particular point, still looking good. I promised I would look at the SMHs. SMH is up $1.13, up 1.08% to 106.17. They need to go above 107.38 would start leg C. And this is going to be the tough thing for me. We remain long. We've taken some real nice gains, nice double-digit gains. What I'm looking at here is, because we're along the 3 times long instrument, I've treated it as a trade, but we got in at such a beautiful low that maybe it'll last a little longer than a trade. I'm just treating it right now as a trade. We'll see what happens. I'm just having a look at 105.30. I just have to check something. I don't want to speak out of turn. SOXL. Oh, we just missed adding back the little bit we took off yesterday. All right, no problem. Okay, IWM. Now remember, IWM broke out and went to 160.17. What happened? 100. Yeah, it is 160.69. What am I doing wrong here? Oh, there it is. 160.69 was 6 cents above the all-time high. So we've gone to a leg E. This little cluster formation here is going to be so important over the coming 5 sessions. Why? Because at 160.65, up 0.87%, if the IWM is to maintain its leadership role, I need to see it in the 161.50 to 162.30. No, I need to see it in the 161. I want to see it in 161.75 to 162.35 area, and that will say to me, you know what? This is going to be a continuous a move to the upside as we're making higher highs and higher lows in the weekly chart. Yes, we need to go through gold and the dollar and all the rest. I'll be right back. Basil Chapman, Tiger Technicians Hour, 877-927-6648. I'd love to take your call. Be right back after these important messages. And then we'll talk about Dave White's webinar on options tonight.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. Are you an options trader that's looking for that extra edge when placing trades? David White will be hosting a webinar on May 16th, which is the Wednesday leading up to options expiration Friday in May, where he'll discuss in depth the methodology he uses for trading options near expiration, including swing trading setups and expiration day trading scenarios. Subscribers to each of Dave's newsletters, Path of Least Resistance and the Technology Insider, gain access to this 60-minute webinar, which will be archived if you cannot attend live. Dave has had some great option trades recently for his subscribers. See for yourself the trading methodology he uses when trading options by signing up today for either of his newsletters, and we'll see you Wednesday, May 16th at 5 p.m. for option trading near expiration, analyzing swing trades and expiration day scenarios. For all the details and to sign up today, visit the front page of TFNN.com.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, Basil Chapman. Let me just check those emails that are coming in here. Okay, couple of things. You see this chart here? This is the iShares of wood, the global timber and forestry ETF, still doing very well. 82.90 was the high that we were looking at about 5 weeks ago, and now it's at 82.24. Nice action. Hey, look at the HGX, the Philadelphia Housing Index. Not good. It's up $1.15 at 304, but look at that, just off the low of 300.05 from 3 weeks ago. We're really struggling. So a couple of things. I said I would get to the dollar, gold, etc., but I need to show you this right now. The 30-year yield, the TYX, the white chart right here, finally made peak C1, C2. Yesterday, it screamed higher. It went to a leg D. That is really incredible. The 10-year, which is the brown one, the TNX, went to a leg F. I'm really going to call it an F/B. I think it has more the characteristic of a B than an F. And this 5-year has gone to G/B. And here again, this breakout, the cluster formation, when they are so close together, the flattening of the yield curves. I have to tell you something. This is very important stuff that we're looking at. It will impact the market at some point. But for now, what we're going to say is it has broken out. Yields are very strong. Yields are strong. And if you put it into the context of what's going on, the dollar has gone to 93.63 today. The left side high that we're looking at is 94.22. That's the area that I think between 93.70 and 94.30. I think the dollar's going to start to struggle a little bit. The MACD is still very good. Stochastic's weakening. It's at 76% in the daily. MACD and stochastic in the weekly charts are fabulous, and you're starting to see improvement in the monthly chart of the dollar. Now, what's really important about this, if you look at gold, see the way you've got a cup formation in the weekly chart for the dollar. Look at the way you've got an arch formation in the weekly chart of the gold contract. It's not, everything about it is negative technically. It hasn't broken down, but it's pulled away from the support of 1305, the 200-period moving average in the weekly, and now it says that 1305 area is very strong resistance. And that's important. Why? Because you've got 1309 as the resistance in the monthly chart. So between 1309 and 1305, there is a lot going on. And that's suggesting to me that there's a little bit more room in the dollar to go higher, and that even a consolidation might just be more a sideways consolidation if gold trades under 1280 for more than 3 sessions. That'll already impact the weekly chart technicals negatively, so I'm watching that. Now, if you're looking at key support levels, we are right at the support level in the trend line support in the monthly chart. So this is a key moment for gold. It hasn't really broken down. It's just in the big trading range it's been in, between about 1370s and 1250s. So it's now towards the lower end of the range. Aha. Silver, have a look at this chart. Silver's holding a little bit better than gold. And you remember, I've been talking about this for a while. What I'm saying is that silver overall has had a much better success rate in holding its support, but it isn't a great looking chart formation, especially in the monthly. It isn't starting to improve just a little bit technically, but it's really not great. So we're going to watch this closely. If you look at high-grade copper also is having this mid-level consolidation, a little bit like silver, more like silver than gold. And the technicals are not that good, but it is holding quite well. And that's a good sign. I put that together with wood, the iShares, the Global Timber and Forestry ETF, as an international something to watch. All right, now we're going to get to EUR-USD. I was asked about, so let's go there. Euro-dollar currency pair broke to a lower low today. That's the arch formation. It has another day in which, what's today? I'd say by Friday's close, it has to close above 1.182, the low of the 9th of May. That'll say, okay, good, maybe a little bit of support. It can bounce now. And it's just about within fractions of touching the 200-period moving average of 1.175. It's at 1.795. 1.795. And the monthly chart is really starting to turn down quite. And USD, JPY, sloppy fingers today. USD, JPY, come on. There you go. Having a nice move towards the 110.5 area. It's at 110.17. It's in peak C, a very quick A to B to C, and that's saying we could have a bit of, there's a cluster formation. And now I'm going to change the pattern here a little bit. We had the rectangle formation. Now I'm going to make it my benchmark of the oval formation. And that's just saying to me, okay, you've gone below, you've gone above, and now you've spiked up in C, you can go to a D. My suspicion is that when the dollar does have a little bit of a rest, the yen, USD, JPY, trading at 110.15, down 19 cents, will come back into the 109.50s, and that'll be the big test, especially on the weekly chart. I'm skipping crude oil for the moment, so now I'll go to it. I have crude oil making an alternate count. Maybe it's an F, maybe it's an alternate count, F/B. All I can say is that MACD and stochastic are good, but they're getting a little bit overbought. In this case, I'm looking at it as overbought by the pattern that I'm seeing in the histogram, and I'm looking at the weekly chart, and that says at 71 right now, down about 30 cents. It's had a big move. It needs to consolidate. It doesn't have to. It should consolidate a little bit. Monthly chart is still very strong. Now, I do want to do this, and I want to do it in such a way that it kind of makes sense. Just real quickly, look, IYT. I was asked about this, so I'll go through this. IYT, nice day today, up 241, up at 193.75. This is an A. That's an A. That's a B. This is it's going to start a great egg C if it can go above 194.49. And as it does that, if it goes to 149.55-ish, I'm going to call that immediately a buy mode. And it says that the IYT is acting very well, and it's going to help the general market. If it starts to fail in the next 2 weeks and you see it trading, this is the iShares Transportation Index. If it starts to trade, it's at 193.75, under 189, 189, I should say 188. I'm going to say 189. That's going to hint that we're going to go into the struggle phase. Meantime, it's acting nicely. IBB, I was asked about. IBB today is up a little bit. Yep, up 84 cents at 107.40. It's in this H to M pattern. If IWM at 107.38, up 80 cents, is able at any point to even touch 110, I'm going to be impressed and say, you know what? Fund managers now can rotate back into the biotech sector. But in the meantime, it's just chop, chop, chop. It goes up, then it comes back down. It's in that range. We've got a break coming up. Got a lot of questions that are being sent here. XLE, XOP, XLI, Triple M, Boeing Cat, UTX. Whoa, I'll be right back as soon as we finish this break.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So Boeing right now is up 27 cents. It's just kind of stuck. The VIX, I was asked about the VIX index. Yeah, so this is going to be very interesting. You see the VIX index at this particular point is down, had a big day yesterday. Percentage-wise, not a big deal in terms of what it's done recently. I've got it in leg F/B, G/C. I don't really take all that much import in the notations because you have to look at it in terms of the technicals. That's the way I do it. the lettering doesn't have the same importance as it does in almost all the other charts, because this is a sentiment one, can change very quickly. What I am looking at is that it's back in the 1332 area, and I would not be surprised if it goes back into the 12s a little later, maybe in a week, maybe 2 weeks' time. I think you're going to see the VIX index become a lot more important, but at this particular moment, it's telling us more about the buying pressure rather than sell. There we go. This is leg D in the 2-minute chart of the E-mini. This is leg E in the 5-minute chart, and a leg D. Now, finally, we got it in the 10-minute E-mini. Okay, so I just wanted to get to that. This is very good action. Dow's now up 86, S&P's up 15.5. Now, there are a couple of things that are going on. I wanted to mention this because we're about education here at TFNN. I know that each one of us, each one of the hosts, really enjoys the whole part of, I mean, that's why we do it. I mean, we have our own lives, our own whatever it is. This is like a passion, at least it is for me, I know, and for most of the hosts. This is something that's really important. So what I am saying is that because we are into education, tonight at 5 o'clock Eastern Time, Dave White is doing a webinar, and this webinar is on the approach that he takes towards options, how he deals with the technical characteristics is purely technical, and what he uses and why he uses it, and what are the best the remedies for giving yourself risk reward, and then more reward than risk. A remedy meaning that if you're wrong, you know exactly where you're wrong and why you're wrong. And reward because you've done the homework. And that's what he's going to teach. It should be a wonderful, wonderful webinar. Okay. So check the front page of TFNN, and you'll see it there, Dave White. Next question I have, SPY option exploration, exhaustive buying option of calls, and on the SOX micron and advanced micro devices. Okay, very good. I like that because we're long. We're very long, actually. So let's see. Micron, he mentions. Micron is trading up. Whoa, 2.34 at 56.34. Don't they have earnings sometime soon? I guess they do. I think it's tomorrow afternoon. Applied Materials has its earnings, and it's up $1 at 55. It's stuck a little bit more. I think LRCX had the huge moves. They were the leaders. They're just taking a well-earned breather. 5 points in LRC. Lam Research, good move. So that's helping the SOX index. Yeah, I can see that. So the next thing I want to do is Triple M. Is this a nice? No, it's down $1.91, down at 200. I haven't seen anything in Triple M, but I have seen something in United Technologies, which is the reason why we've been long since the beginning of last week, since the 7th of May. We've been long under 100, well, in the 119s. It's trading at 124.95 right now. I like it. I, in fact, was going to do an option trade on it, and then I just thought, you know, I just do too many things. I don't want to get involved in stuff right now. That I just we had positions that I needed to monitor. Another time I might do an option on one of our trades. But in the meantime, this is done very nicely, and it goes at 126.65 and starts leg B. That's going to be real tough. This is right now. It's about to bump into resistance. This is a very important moment. Question, Basil, what is your absolute #1 trade today through May? Please, if you care to share. Through the end of May, it's to continue the long position that we have both in the Dow and the semiconductor index, the SMHs via the SOXL. Why? Because if it can survive any sharp pullback between now and what's today, Wednesday? Between now and Tuesday of next week. In other words, in fact, let's do that. Good question. Why not talk about it? If the SMHs can hold above 100, it's at 106.37. If the SMHs, the Semiconductor Market Vectors ETF, can hold above 103.20 to 102.80 between now and Friday, And then between now and next Tuesday at this time, maybe we can make it Wednesday, it's about Tuesday, Wednesday, any market pullback does not include the semiconductors, and they are still holding above the level that I just discussed right now. And in fact, they've made higher highs. I have to then consider that what I thought would be a fairly weak, well, they have been fairly weak since they pulled back from the minus 16.5% from the 114 to 55 high of March, mid-March, down to the low of late April. All I can say is that I was expecting this. This is a bounce, and if it continues as a buy, that's fine with me. We'll just we'll modulate whatever we've got and keep a position, and you have trading positions. But that to me is the big thing in May. Look, we're halfway through the month, and we've done real nice going from the 94s, let's call it 95 to 107. So that's 13, 14 points to the upside. What I would say is that because it took out the left side high of 106.14 that was made 15, that was made back 14, and back on the 17th of April, that's suggesting to me that I have to keep in mind that the 108.56 high that was made the week of the 29th of January for a right shoulder test, that's kind of in play. So that's important. Now, you asked me about A-Trade. I'm also going to say to you that the dollar position that we've got, it's going to be critical how it closes on a monthly basis for the month of May. Why? Because in May, you've got, for the first time, this is really amazing, for the first time since the dollar broke down in April of 2017, it's over a year ago, it was trading in the 101 area, and then 98.70, and then it was down ever since. It only touched the 9-period moving average in the monthly once or twice. But now what we've done is this is the first, not only the close is important, but it's the first decent push to the upside. 92.41 is the 9-period exponential moving average support in the monthly chart. So the positions that we've been taking have been positions that I was trying to prepare that if there was an important low that was made in the market involving these particular indices, how they rally into the end of May is going to be really important, because if they are strong at the end of May, we might have made lows in these particular indices and stocks. So it's a risk reward I was prepared to take. I'll be right back. Basil Chapman, Tag the Technicians Hour. I do want to go to some of the rails, and I don't want to look at the oils, XOI. I'll be right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks. So the question in the den was, where did it go? Basil, what is the best #1 trade? Where did it go? Basil, what is your absolute #1 trade today through May? Please, if you care to share. So I do have a trade for my subscribers. I might talk about it tomorrow when I'm interviewed with Tom. I'm not going to talk about it right now. I have discussed it before, but it's right at a critical moment at this particular stage that is up double digits, very low price stock. It's in the financial area, very good company, had great earnings. I like it. I would say that is actually my #1 trade, not because of the price, which is now at $3.76, and we own it from $3.38. Having taken a little bit off yesterday at the opening, just you know, a reward. But that is actually my favorite trade because I think that this one has the potential to go into the falls. And once again, it's not so much the number, it's in the financial area and acting very well. And that's the reason why I think I can give it another 2 weeks. We'll see. I don't know. That is actually my favorite trade. Longer term, I would love to see that my UTX position is going to be the low that was of importance, because UTX took a dive. I mean, for a major Dow stock to drop 17%, whoa, that's a big number. So I don't know if it'll turn out, because the weekly needs a lot of work, monthly needs some work, but you have to start off with the daily being good, and the daily will become really good if it's able at 124.90 right now. If it's able to get into the 126.60 or 70 area, that'll be very good action. So now I need to go to another thing that I was looking at. So the XLE, I haven't looked at that for a little while, a couple of days. XLE, it recycled. Now I'm going to call this A, B, C, and it's in a leg, very quick. A peak, B peak, C peak, D. And that very often denotes to me that you're getting close to some kind of a consolidation. It doesn't say that's a smash to the downside. And what's really important about 2 things that are going on right now is that it has a Chapman wave stork leg formation that has morphed into a propeller shaft. That is another technique that I developed a long time ago. And let me tell you, when this happens, look, you want to see an example of this? Look what can happen. Look at this. There's the Dow. There's the stork leg formation in a very brief moment where it came back to test the body, and then it broke out, which is turned into a Chapman wave. It's usually, I call it a 1-to-1. propeller shaft, the right side can actually go higher, it can go lower. You have to monitor that almost on a separate basis. So this says that pattern that we were looking at just a moment ago. Am I going to remember what we were looking at? Am I going to remember? I'll go back to XLE. There it is. Whew, thank goodness I typed it in there. XLE has that potential, and it's looking very good. And it says to me that the cup formation in the weekly chart in leg C, it stopped being a gray C. It's now a buy mode. I have to put an up arrow in here that says it should go to a D. And if that's the case, there's a real good chance it's going to test the high that was made back in January, the week of the 26th, at 78.39, trading at 77.47 right now. If it takes it out, you remember how important Chapman Wave C1, peak C2 is? Very often, we just saw that in the 30-year T-bond yield. Now look at this. There's a chance we're going to go to a D in the XLE. So XLE, and I have to apologize to my subscribers. I don't know what it is. I just kept missing on focusing on the oils. They've had a fantastic run. That is especially the stocks like, let me just see if Schlumberger is still one of those. Yeah, Schlumberger, just a lot of these things had beautiful percentage gains. And here I am figuring out some other things that, well, they worked. I can't complain. We had some real nice winners. But still, it's upsetting to actually miss a sector that's been in demand and doing exactly what you want to see. Is that EF? I don't want to do this in a hurry. I'll be back to it. But Schlumberger trading up $1.32 at 72.92 is an example of what we've just been talking about. Oops, I didn't mean to do that. Let me go back again. We've got OIH. OIH, that is the oil service sector, trading at 28.93, up 49 cents. Yep, finally got that D. I spoke about this the other day. I said there's that. There's the stalk leg formation. It popped up. It came back into the body. Now it's breaking out. Leg D in the daily. Leg D now. Just for the moment, I might give it another. It's a weekly chart. I might have to give it until Friday. I'm pretty sure this is in a buy mode, but at this point, I'm just saying it's in a very nice U-shaped pattern. It looks like it wants to tackle the previous high, and that was the high of the 25th of January, the week of the 25th. At 29.53, and it's at 28.93 right now. Okay, so here are a couple of things that are very important to this particular moment. Within the context of markets becoming overbought to the extent that everything is suggesting that they should pull back dramatically, there's a technique that I discovered years ago, and that technique is that if you think of time as important as any other technical tool, then you could have Fibonacci, you could have Chapman Wave, you could have on-balance volume, you could have whatever you want. Gartley's butterflies. Time is almost as important as anything else because we have usurped, if you look at the Dow, you have usurped downside energy by having these bounces off the 23,300s area. And that takes downside energy away, but it also says it limits the upside until there's a new generation of energy that's created that can actually rocket the prices above all the resistance, the near-term resistance and then the intermediate-term resistance. We won't even do that until we break above 25,500 in the Dow. A question here is, if you have time, a look at UGA. Yes, I had a couple of questions. I'm going to get to them. So UGA, United States gasoline. So gasoline, is that the same? Is that doing the same thing as the USO? No. It's a little bit the same. So I've got the USO, which is United States oil, not the gasoline. I don't know if they actually have, the pattern looks the same, and it's going to A, B, C, D, E. So it's bouncing around, just bumping into resistance. So I'm going to say to you that a question, old G, is that if I like what I see. I think it's becoming a little toppy, and I would not be surprised if you asked for the UGA. UGA, that's the one we'll look at. UGA is called United States Gasoline Fund, LP, and that's at 35.42. I suspect that it's going to trade between the 35.70, maybe 36.40 area upside, and 34.70 to 34.20 on the downside over the next 2 weeks. Those are the parameters I'd be looking at. Oh, a whole bunch of questions came in. Salt. That's the Baltic Dry Index. Let me see if I can get that. I'll be right back.
One of the keys to success in anything is the ability to make new distinctions. So what new distinctions are you making to achieve even more success in your life? When it comes to trading and investing, I wanted to become the best of the best, which is why I went on to make new distinctions. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest have been tracking my newsletter signals, which have earned me the ranking as the #1 market timer in the nation for the S&P 500 in gold. On Wednesday, May 23rd at 5 p.m., I'm going to share with subscribers one of my newest distinctions, which is how to follow the money and do so in multiple currencies. You see, money has to flow somewhere, and with the world getting smaller and smaller each day, you and I can identify exactly where most of the money in the world is flowing. Sign up for Mastering Probability by coming to the homepage of TFNN.com to begin your 30-day money-back guaranteed trial membership and learn the exact tools that I use to time the markets. And if you can't attend live, don't worry, because the workshop will be archived on your members page for the next 30 days. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Whole bunch of emails. Let me just do this right now. So Macy's, question about Macy's is up 10.32 at 33.02, up 3. You know, Macy's, the turnaround in Macy's has been quite dramatic, and it's really important. Yes, it's way off the highs in the monthly chart. Hit 17.41 a year ago, and now it is trading at 33. It's almost double. Very good action. Leg C in the weekly chart. I'm not sure. I'm calling this an E for now in the daily, but it looks to me like Macy's is attempting to form some kind of a pattern here that says even if it consolidates, it's trying to turn the 24 to 22 area into really strong intermediate term support. So I hope that helps you. Next question was IYR. Now this is fascinating because this is the REITs, US REITs. They had a fabulous move. They made a peak F. I spoke about this earlier in the week, last week, I think. I said a leg F, and now it's gone to a peak F in the 78 area. It's trading at 75. I don't think they are ready yet for anything. If you did the trade that I talked about as if it's just a counter trend trade, I would be out of it right now. I just wouldn't be doing anything there. Goldman Sachs is trading right now down 15 cents. It's kind of stuck. And then the XLF and the XLF, which is the S&P financials, select financial, that's like GS, it's a little bit stuck. But the one that's really improving quite a lot is KRE. KRE is the regionals, and I've got this as a brand new leg B in the day we are actually long for subscribers, and I'm liking KRE a lot better than the XLF. So we're about to break. Don't forget, you've got Steve Rhodes coming up, great show coming up, I'm sure as always. You've got Dave White. Dave's doing a webinar tonight. If you're into options, you don't want to miss this program. This is a webinar you do not want to miss. Dave's had some fantastic trades. And then, of course, Tom O'Brien. What do we say? Tom O'Brien is the expert in gold and the gold stocks, etc. So, and looking at the market and giving you his volumes, etc. Hey, great shows coming up today. I'll be back tomorrow. Have a great day. Check out my opening call. We've had some real nice positions, and hopefully they will stay that way. You never know. Have a great day. Be back tomorrow.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.